Yeah, so as mentioned, we're going to do earnings focus today. Thanks everyone for being here. And as usual, we'll just start with the boring disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. Great. I'm Jason Hitchings. I'm the CTO of Capital Market Labs. You probably know me by now. And yeah, we're gonna talk earnings today. So there's quite a few places that earnings is captured within TradeMachine, and there's a couple things that are a little bit involved, and it's worth understanding them. And they are kind of involved or have some details to them for a good reason. Because if they weren't intricate, then it wouldn't work. It's actually one of the things that we've spent a lot of time refining and working on, especially in the first few years of having the backtester out, because you would try to create an earning strategy and then you'd look at the trade details and you'd say, well, that's odd because I was trying to place an earnings trade and it opened a position before the earnings event, things like that. So we have a lot of logic in there to make sure that the strategy you are trying to trade is actually the strategy that does get traded. And so we'll dive into that today. I'm going to start on the Today tab. Just going to draw attention to the fact that we actually do have a little earnings calendar here. So if you scroll all the way down on the Today tab, you'll see this. And you can view it in a couple different ways. But if you're ever just wanting to see what's happening in the earnings world, this is a good way to do it. You can view it monthly or weekly or as a list. Let's see if Mandy, you're seeing TradeMachine now, aren't you?
Yes.
Okay, I just want to make sure I shared not just that
Sorry.
window, but the whole screen. Nope, all good. So yeah, as you scroll down to the bottom here, you see this earnings calendar. So these are showing everything happening today. Note the unverified ones. Basically, I would just ignore these. These tend to be more fringe companies, especially if it's sometime soon. People that just don't report in a normal way are very small companies. We have a very good source of earnings data, and so if it doesn't say unverified, that means it's verified, and you can rely on it with pretty darn certain it's going to be correct. There's little plus signs so you can see more. You know, when you're in earnings season, there'll be a lot of these, and then it'll calm down as time passes. You can also view monthly, and you'll notice these little more buttons. We always put the verified at the top and the unverified at the bottom. Also, if you're just wondering when the next earnings event is for some company, I'm going to click over here a few places. So if you have a position in AYI and just wanted to know what's happening there, a good way to check when the earnings is if you're not sure is just to jump over to the back test. If you put AYI in and then you add any kind of meaningful earnings rule, I'll just say only trade earnings just for the sake of example. If you just do any back test, it will populate the earnings up here at the top once that's all done. And you can see that the next earnings is on April 3rd. It says before market, and it doesn't say unverified. So if it doesn't say unverified, then you can be pretty confident on that date. So it's just it's a nice way to get a little extra value out of TradeMachine because you can quickly look up, verified earnings events that way if it's faster than clicking through the entire calendar. Okay. Yeah, there's a list view there. There's a monthly view, so you can look at it in a few different ways. And just as mentioned, yeah, if it says not verified here, then they're trying to infer it based on past dates and if it's a Wednesday or not, but that it's subject to change and it definitely could change. For bigger name companies, this is almost always something far out in the future where the company just hasn't officially announced when the next earnings event is going to be. So they just try to like give you a ballpark based off of historical trends. But when it comes to actually placing a trade, please don't rely on anything that says not verified. Okay, so in the bottom of the Today tab, there's a few different earnings strategies that are built in, and we're going to look at two of them in detail today. We're going to start with this pre-earnings call. So these aren't triggering today. So far, at least when I was making this deck, we didn't have any in the Today tab yet, but these will be perfect for just illustrating an example. So I'm going to start with a simpler one, which is this pre-earnings 3-day call. So when I click on it, it pulls up this backtest. And it says that we're going to be trading a 40 delta call, so a call that's a little bit out of the money. It's going to be expiring 7 days in the future. And this has a pre-earnings, like a 3-day pre-earnings call. And so if you scroll down, and I'll just kind of follow along in the backtester. If you scroll down here to custom earnings, you can see the specific rules that are set up. So I click that and I have to scroll back up to the top, and it says, I want to open this position 3 days before earnings, and I want to close the position 1 day before earnings. So this strategy is basically trying to take advantage of excitement around earnings without actually taking an earnings bet. We don't have a lot of strategies that actually hold through earnings, but you can certainly test your own. But we have noticed some interesting trends about before earnings or after earnings where you can kind of benefit from, market sentiment without necessarily taking the earnings bet directly. So if we're going to open 3 days before and the option is 7 days out, then the logic that the backtester applies, that TradeMachine applies, is it says, okay, you are going to be purchasing an option 3 days ahead of earnings. If you're saying that I want my option expiration to be after that earnings event, you're saying, okay, I want whether I hold it through earnings or not, I want to open a position that's going to capture that earnings event. So that logic here, this open position 3 versus this days to expiration, is really critical for how the backtester sees the earnings. If you said I want to open a position 7 days before earnings or 30 days before earnings, I'll just say 30 days before earnings, but your days to expiration was less than 30, the backtester is going to think, okay, you want an expiration which is going to expire before earnings. And so it will enforce that rule. And likewise with this. If the open position before earnings, if this days to earnings is less than the options expiration, then it will force the expiration to be after this date. And that's how you'd want it. And we're going to look at a couple examples here. It's actually greater than or equal to, then it will try to capture it. If you really want to be sure, then you could say open 7 days before earnings with the 7 days to expiration call. But you could always just put this to 8 days to expiration to be very clear with what you're trying to do. The option backtester will always, when it's looking for days to expiration, it'll find the closest thing it can. But if this days to expiration is greater than this days before earnings, then it sends a clear signal to it to look for an expiration after the earnings event. And as I mentioned, the opposite is also true. If it's going to expire before earnings, it will force it to expire before earnings. Now, sometimes that means there just won't be an option. So if you say, for instance, I want to open a trade 3 days before earnings, and I want my option to expire 2 days before earnings, there might be a Friday expiration coming up right then. It might be possible to trade, but most of the time it won't be possible to trade because it won't find an expiration that's expiring in the next 2 days. And so it will send a little warning message to the screen saying, hey, I couldn't open a trade at this particular time. So, no reason to be alarmed by that or think something's not functioning the way it should. It's actually doing exactly the way you'd want. If you're trying to get something to expire before earnings, you don't want it just to be like, I couldn't find something, so I'm going to look after earnings instead, or vice versa. So it will force these rules to be true, and it won't open a position if it can't make it true. Okay, so now in order to kind of dive in deeper to why you'd want some things to expire before and some things to expire after, and how it would really enforce those rules very strongly, I'm going to look at this diagonal, this pre-earnings diagonal. So this is going to be a more advanced trade, and it's going to have one leg that expires before earnings, and it's going to have one leg that expires after earnings. And we're actually going to dive into the trade details and look at one of the specific trades that it places to show you that it's doing exactly that. So looking at this trade, it's this diagonal, and then we're going to look at the custom strategy and the custom earnings. So the strategy says, I want to have an at-the-money call approximately 14 days out, and I'm going to be long that call, but I want to be short an out-of-the-money call that expires 7 days out. Now, when you look at the custom earnings, it says, I want to open this position 14 days before earnings. And so, according to our logic above, this option will be forced to be greater than or equal to the earnings date, and this one will be forced to be less than the earnings date. Now, not all stocks, not all underlying have weekly options, and so even without weekly options, it might have an option expiration expiring before earnings in the next 13 days, and it will always have an option expiration after 14 days. So if it happens to have an option expiration before earnings, it will do its best. It'll choose as close to 7 days as possible, but it'll choose anywhere from 1 day to 13 days. It'll just force it to be less than the upcoming earnings event. And this one, it'll force it to be greater than the upcoming earnings event in terms of the expiration date. And again, if it doesn't have weeklies, then it could be potentially 45 days out if it only has monthlies, like if one's expiring in a week and another one's expiring in 37 days or something. So let's look at that in some depth. And so when I click on this strategy and I look at the actual trades, the first time that there's some technical conditions with this too, but the first time that this trade triggers is on the 3rd of November. So obviously both legs get opened at the same day. And we see that one is this November 19 call, and the short option is this November 12 call. And so one of these is basically 9 days out, and the other one is like 16 days out. So it did a pretty good job of finding something close to the desired time frame of 7 and 14 days in the future. And so you could kind of zoom in. So if I go to the Today tab and I click this thing, you can kind of zoom in on this individual trade. So I'm going to go down here. I'm going to scroll this over, kind of zooms in, and you can also move left and right this way. But I can zoom in on the trade. It's a little too far in the future. So this is the trade we're looking at. And if we look closely, you can see these lines, these little dotted lines going up and down, and those are the earnings events. And so I can kind of, when I scroll over to figure out the exact earnings date, I can see that earnings date's on the 17th of November. And then we open the position and close the position. So let's see if it did a good job. So as I zoom in here, I'm just putting strong lines there so you can see it. Sometimes these little E's will get hidden on the chart when you're zooming in, but those dotted lines always show you what the earnings date is. And we can see that we opened it a little bit before earnings and we closed it before the earnings event as well. So that's when that trade took place. I zoomed in on the map and I saw that it was on the 17th of November that earnings event took place. And then we're going to look at our strategy. So again, we have this, we wanted to open this position 14 days before earnings. This description tells us why we opened. It says open 14 days, the long calls and the short calls. And this one is expiring on the 19th. Well, the 19th is after the 17th of November. So that did it correctly. And then the 7-day rule should expire before, and the 7-day short option is expiring on the 12th. So you can see that using these rules, this 7-day roll and this 14-day roll, it is forcing the short option to expire before the earnings event, and it's using, and the long option will expire after the earnings event. The nice part about that strategy is that when there's an upcoming earnings event, the potential movement of the stock is going to keep a lot of value in that option. Because even if the option's expiring in one day, if it's going to capture an earnings event, then it's going to have a lot of premium built into it because there's a lot of potential movement. This one that's expiring before, this one's going to decay pretty fast. So that we open this thing for $1, that dollar is going to drop off pretty fast in value. And then this one's going to maintain a lot of value. And if we're lucky, there might also be some kind of pre-earnings, excitement. And this one's capturing it, and this one's, decaying pretty rapidly. So that's kind of what this strategy is built around, and it's why we use a diagonal. When you first get into TradeMachine, if you click and it's like a diagonal and it's a custom strategy, it's like, it's a lot for someone that's brand new, and it's like all these custom rules and that kind of thing. But using these settings, you can have an option that this option is expiring very quickly. There's a lot of theta decay, and this one is maintaining a lot of value. So even if nothing happens, even if the stock moves sideways, this one's probably going to decay a lot faster than this. And so this strategy can do well even if the stock moves sideways a lot of the time. And so when you're constructing your own earnings rules, these are just great things to keep in mind about days to expiration, days to the earnings event. It can be for earnings, et cetera. But that's how all of that logic takes place. As mentioned, that short option is going to decay really fast because it's expiring before their earnings. Okay, so then let's just quickly look at when we're going to close it. So our rules to say close 1 day before earnings. When we look at this, we know that the earnings is November 17th, so we would expect it to close on the 16th. But this actually says on 12th of November, it closed. And it said days to expiration. So the reason it's closing on the 12th instead of the 16th is because when we created this custom strategy, we said close all legs with front month options. And so when we sold this out of the money call, it was for the 12th of November. And so when this reaches expiration, it closes both positions. If you uncheck this, it will actually continue to then hold this long call up until 1 day before earnings, because that was the earnings rule we had, and then it will close this on the 16th. So this would close on the 12th, and this would close on the 16th. As is, it says close them together. And so when this front month expires, it closes both positions. If we just said, okay, let's just do a call, let's not do this diagonal thing, then we can see that it opens on the same day that you'd expect, and it waits until the 16th to close it. So nothing's expiring before the earnings event, and so it is just going to close it 1 day before as expected. So that's what that little close all legs with the front month options. That's relevant for all custom strategies, not just earning strategies. If the front one expires, it'll close them all. Okay, great. So that was one of the more involved earning strategies with a diagonal, that one is expiring before and one is expiring after. If you understand that, then you really understand a lot about how earnings is handled within TradeMachine. But I'll look at one or two other little things. So there's also this little setting at the bottom here that says only trade if the last earnings stock move was up, down X%. What that means is that the previous earnings event, so I used NVIDIA for our example, so I'll just pull the chart up real quick. So if I look at NVIDIA, because I think they just had a real big earnings move, if I just look at call and I look at, really any kind of earnings move, let's see here. I'll just simplify this. I'll just say only trade earnings so we can see the earnings events. So I'm going to zoom in so we can see the data a little more closely. This dotted line is where the earnings event is. And you can see that we jumped from here to here, so that we're at 674-ish, and then we're up at 785 or something the next day. So that was a huge, huge earnings move. So if you place a trade that says, I only want to trade if the previous earnings move was X% up or down, it's talking about, so starting here, anywhere in here, if you said that I wanted a positive earnings move, then it's going to be active. Right in here, it looks like, if anything, it was slightly down after earnings. And so that I would expect, if I'm reading that chart, from this zoom level correctly, then it wouldn't trade in this position. So if I go into custom earnings and I say, for instance, 2 days after earnings, I want to open a position only if the stock was up, 5%. And then I'll go ahead and close it after earnings. And actually, this is good. I had another slide this, but this is saying this is impossible because it's saying I want to open a position 2 days after earnings, but close it 1 day after earnings. Like that's not how this, that would be carrying it. That would be talking about two different earnings events, basically. So it will send you that warning message if you try to have a setting like that. But let's just say that you wanted to hold it for 10 days or something like that. Only if the stock was up 5% in the previous earnings event. So now so it's saying it's not active right now, but you can see after that previous earnings event, it pops and it's going to hold on to it. But not all earnings events, like this earnings event didn't qualify. There's not a trade right after earnings here because there wasn't a 5% upwards move. This one did temporarily show a 5% upward move, but then it didn't last. So yeah, that's what that setting's doing. It's looking at the previous earnings event, and then based on that, you can create some interesting strategies around, like if there was bad news and the stock is, you can look at the moving averages of the RSI for kind of what the trend in the stock movement has been, and then you can build strategies around that, whether you want to sell a put spread or buy a call or anything along those lines. But that's what that customs earning strategy is doing there. So yeah, after that, now we've talked about most of the major earnings things. As mentioned, that one, triggered right for NVIDIA. Anytime that you set an earnings alert here, it'll say add alert, and then it'll create this days before earnings alert for you based off of your settings. If you also had a technical rule set, like if you said, yeah, that the stock is above the S&P 5, that the stock is above the, simple moving average 50 days, then it should capture that as well. And it creates, instead of just days after earnings, it would be days after earnings with technicals. And then the technical condition is the stock is above the 50-day moving average. When you get that alert, it's going to send you this link, and this link is going to have a link to that back test where it will pull that alert up. We mentioned it previously, but you can set this alert for multiple things at the same time. And just make sure that the ticker you're looking at is the one that you got an alert on when you set that rule. Another thing you can do that I like to do is let's say that I was trading a strategy that was going to open 14 days before earnings and sell 1 day before earnings. I'll go ahead and set another rule in here that says days before earnings 1, and I'll say close NVIDIA. So I'll set a close notification to myself just to kind of make managing my positions a little simpler for myself. So that's another kind of handy trick. You can also do it with if you have a position expiring, for instance, maybe you set a limit, to close out a position, but in case the limit's never met, you can set, on a calendar day, whether it's around earnings or just on an option expiration, to exit the position on a specific day. I end up using this just for things in life because I find getting a text message about, whatever dentist appointment today kind of more convenient sometimes. So you can always set those. Calendar day alerts automatically delete themselves. They will only trigger once. And then finally, 2 more things. So on the Today tab, in terms of alerts that you can set, we have these earnings-based strategies down here. If you set a Today tab alert, all of these are these earning strategies at the bottom. For anyone that's new here, all of these strategies, there's a lot of detail here. If you click the little question mark, it'll open, some details about it, oftentimes a video. You can also go to, this is actually opening an article that kind of explains the strategy, which is good too. And also if you go to Learn tab, you can find a lot more information about those. But yeah, you could just say, yeah, for the NASDAQ 100, I just want these alerts. You can save it, and then you'll get an alert when these specific Today tab alerts are triggered, which have some additional conditions and criteria to say that they have a certain winning percentage, a certain total return, a certain average return. They've traded a certain number of times over history. So if it only has 1 win and 0 losses in 10 years, it's not going to make it onto this screen. It has to have a couple trades built into it. So there's a lot of logic that happens in order to get things to appear on this screen. And then finally, before we move to any questions everyone has, on the Pro Scan, there's all of these earnings strategies down here. So we have only trade earnings, these long triangles. We have all these post earnings and pre-earning strategies. If there's ever one of these that you're interested in, you pick the strategy and then you pick what group of symbols you want. You can just say all if you want all, or if you want to make sure that things are pretty liquid, you can choose the largest 500. Then you can sort by total backtest return or average trade return, and look for some that have a couple trades in them to have a little bit of a trend that's going in your favor. And if you click this is the add alert column here. Then when you have those alerts selected, you can add those alerts directly to this thing as well. Yeah. So that's another way to add alerts. Yeah, so I've kind of showed a couple different areas, kind of really the most critical areas for how you can kind of play with earning settings and add earnings alerts within the product. And so, yeah, with that, let's just dive into questions.
Would you like me to read?
I will pull it up. Sometimes I process the information better if I read it.
Of
What is
course.
this? What is the strategy behind the Bollinger Band width percent? Okay, let's look at the Bollinger Band width percent. So the actual technical for the Bollinger Band width percent is, I'll do a backtest with a Bollinger Band real quick. So if you're just wondering what that technical means, Or if you're wondering what strategies use it, would be a different question. But in terms of the technical, when we have a Bollinger Band with percent, you can, nerd out and get deep on those technicals if interested. That's talking about the Bollinger Bands are essentially, a standard deviation up or down in the movement of the stock. So it's kind of like creating a band around the stock movement. One way to trade the Bollinger Band is to say when this thing breaks out of the Bollinger Band, like this would be breaking up through the Bollinger Band on that bar. This would be breaking down through the Bollinger Band. So it's kind of like a pattern of trading within a certain range. It's looking at basically taking a moving average and then taking a kind of a standard deviation, like an up and down movement around it, and putting a band of sort of typical movement. If you make the standard deviations, this is 2 standard deviations. If you make it 3, you're going to have a really fat Bollinger Band. If you make it 1.5, you're going to have it a tighter Bollinger Band, in which case you're going to have more breakout signals. But in addition to breaking up and down through this thing, another strategy is just to say when it gets wide, which is kind of a measure of volatility, because when you get a lot of up and down volatility, you can see that the band gets thicker. When you have more quiet stretch of time, you can see that the band is thinner. If you want to know about any specific strategies around it, then it might be a little more in depth, and so I might point you to the Learn tab for that. Okay, for non-earnings alerts, if an alert, whether Personal or Today tab, has never trade earnings checked, does the back tester make sure the alert is not within the 2 days before or 2 days after earnings before generating the alert? Yeah, that's a good question. For that technical alert, it will oftentimes the backtester, when it's generating a technical alert, it's not looking historically at what's happening with the alerts. It kind of, when it's saying it got triggered today, oftentimes it's just looking from the current moment in time forward, unless you're saying like an after earnings trade. So it is possible to get an alert that says never trade earnings where your earnings was yesterday. So that's a good thing to check. How much that would actually affect your strategy versus waiting an extra day is, it could affect some. So it's a good thing to consider with the never trade earnings. And that's kind of on our to-do list, is to like add a little bit of historical checking for the live alert when there's no kind of, special earnings alert set. But that's a good question. Is there a way to create an alert when a triggered trade has reached its profit target? Currently not. That would be helpful. Yeah, so it's not, the alerts right now are not based off of the kind of current options market. It's not like saying like, okay, well, I traded this back test and this back test, hit a limit or that kind of thing. So the alerts are really based on the technical conditions and the earnings conditions in that moment. They're not based off of like the last like 5 or 8 days of performance or something like that. We have had, a lot of discussions internally about, do we want to allow people to start to track trades across time more than just a back test, but actually kind of track the performance of trades across time, almost like a paper trading within TradeMachine. If we do add that feature, then at the same time we would add exactly what you're talking about, which is tracking the performance today of something that you placed a position in previously. So yeah, that's a very good question. It currently doesn't sort of track your back test and track the performance, but we definitely see the value in that. Would you consider using an alert which triggered a day or 2 ago? I guess it would depend for me a little bit the alert. I think if it's like a 14-day pre-earning technical alert and the technical conditions are true and it triggered yesterday and I see it today, if it was a bullish strategy and the stock hadn't moved a lot, like the stock hadn't jumped up, 15%, this is just my personal, way I personally trade, then if it's a stock I wanted to trade, if it was an event I wanted to trade and I just kind of didn't get it in time the previous day, then yeah, I would be open to, coming in a day late. But I wouldn't do it with a 3-day pre-earnings trade because that's just too short of a time frame. Yeah, so to me, if it's a kind of a longer time trade and the stock triggered yesterday and the stock hasn't moved, if I haven't kind of missed my opportunity, if I didn't if I didn't miss out on 20% of a movement, then I personally wouldn't necessarily be adverse to getting into it. But if you want to follow the backtester as closely as possible, then backtester, wouldn't take that trade. So I'm noticing that frequently tickers that get triggered for certain trades don't have the options to do the strategy, and they are triggered for. How can you filter to have those tickers not even appear in the list? Yeah. Yeah, so there's a couple different scenarios for that. Sometimes there's like a weekly strategy. The weekly strategies there'll be moments in time where, for instance, that strategy we looked at where you wanted to trade a 7-day option and a 14-day option around earnings. There's times where the earnings window just happens to fit with the option expiration windows where you actually can put that trade on. So if it appears on the Today tab, and it's won 2 out of 3 times or something like that, then it means that it's finding ways to do that trade occasionally. But if it doesn't have weeklies, then it's harder to. With more complex strategies like the 1x3 by 2, yeah, sometimes what will happen is that the actual like options can be wide enough that if you don't have a good tight option bid ask spread, then you can't really get a good implied volatility in delta, just for a lot of nuanced reasons. Like if that midpoint is not above the theoretical value, then it can't generate a delta. So yeah, there are times where it can't figure out how to open the trade just because the options montage is basically a mess. That is something that we will be adding. We're working on a liquidity filter right now, which will be looking at the bid ask spread and looking to make sure the midpoint is above the theoretical value. And that will be something that we can add directly into the Today tab. Another way to go about that is to filter based on the S&P 500. Sorry, it's just caching the results on this page. But if you filter the results on the S&P 500, then it's not guaranteed to be very liquid, but it's much more likely to be liquid. So that's one way to do it. Also, any strategy that you're testing, before you even add an alert, like one way to test liquidity in the tool is just to say, okay, so for this particular strategy, it won 9, lost 7, have a profit of $820. Right now, it's assuming a mid-market execution, so a very optimistic assumption about that. If you click this little settings gear and you say, okay, well, let's say I don't do that well, I'm only halfway between mid and what the market's bid or ask, you can see kind of how much slippage there is. So this one is still profitable. You won one fewer trades, your profits are a little bit lower, but that kind of indicates something that's pretty liquid. It didn't like radically change your returns. If you go from midpoint to halfway to mid, and you go from 8-0 to 4-4 or something, to me, then I'm like, okay, this thing, it's too wide. I don't want to have to be that stressed out about getting midpoint execution. I don't want to watch a trade all day and be fiddling with my bid ask spread. So that's kind of one way to quickly check it. But to your point, we are working on sort of scanning all the option spreads, for the underlying over time, to say only if the spreads are tight, to kind of have a liquidity score, like on a scale of 1 to 5, where 5 would be the most liquid. So that will be coming in the not too distant future. Are you planning on modifying the text associated with the alerts? I'm interested in including the type of strategy in the opening sentence of the email alert. The reason is to enable the ability to sort quickly on strategy types and bin them for further analysis. So if you on the Today tab right now, these if you set alerts here, they will say the specific strategy that they, you know, that generated them. Right now we haven't, let's say that you're like click a bullish burst or something, and then you say add alert. We could do some work and make sure that everything's exactly the same between those two things. But for instance, if you changed from never traded earnings to custom earnings, it'd be the same technicals, but the earnings would be a little bit different. Or if you got in here and you tweaked the technicals and you said 9 days instead of 10 days, it's more or less the same strategy, but just slightly tweaked. So when you add an alert, it would be a little unclear if that's what you meant or not. So I think there's definitely a place, really anytime, like if it'd be nice to know when you click this that it came over from the bullish burst strategy. So until you change the name of the technical, it would be great to just put bullish burst with a link to the help. So that's something that's on our roadmap. What I recommend in the near term is just, it adds a little bit extra work for you, but if you just put bullish burst, then, that's kind of one way to, keep track of those things. I know it's an extra step. And I definitely take your point about your question. Yeah. Yes, Robert, we're definitely see the need for having some more liquidity information. So that you can expect in the not too distant future. That's text associated with email alerts. Yeah. So right now, if you want to know what strategy came from, then if you just put a little note, that's the best way currently, but we definitely might add some additional information in the future. Great. Well, we're right at about 42 minutes into this thing, which is kind of the sweet spot for us between like 30 and 45 minutes is kind of how long we try to do these. Any last questions before we wrap up for the day? Okay, great. Well, much appreciate everyone being here. Um, I hope so the earnings discussion was helpful for some people, and definitely look in the future for some additional information on liquidity and some other things like that. Thanks, Robert. Yeah, thanks, Mark. And yeah, please come join us in community, ask questions, talk to us, and lots of great information in the Learn tab. All right. Thanks, everybody. Great. Thanks for being here. Have a great day.